Automation secret number 2, the 3 virtually unknown trading safeguards that every automated trading strategy must have, and how safeguard number 3 saved me $10,320 earlier this year. Who here is excited to know about the safeguards that your options automated trading must have? Well, again, we're going to be diving into that in today's training. So, first off, a quote from Stephen Burns, who, if you don't know, is a professional trader for over 10 years now, and he's created a lot of great educational content, written plenty of best-selling books on trading, and a quote of his is this: if you do not manage risk in trading, then nothing else you do really matters. In the long run, you will just give back any profits. Guys, who here knows this is true, where you've made a lot of great money, maybe even small money over and over and over, but then one huge loss comes and it negates all the profits you've had and puts you in the negative. Guys, this has happened to me so many times, and if it hasn't happened to you, then you haven't been in the trading game long enough. What we know about trading is that it's all about managing risk. If we do not manage risk correctly, then no matter what type of strategy we're doing, we will not win in the long run. So that's why we must know how to set up safeguards. Now, I did want to throw in a little fun aspect into this trading or training and talk about some movies. So what do these 3 movies have in common? We have The Terminator, we have Avengers Age of Ultron, and we have I, Robot with Will Smith. Well, if you haven't put in the comments yet what this is, the Terminator, what all these have in common is the Terminator is a robot that comes from the future to kill a human. And Age of Ultron is a robot who thinks the only way to save the human race is to kill the entire human race. And I, Robot is a story of an AI robot who wants to kill the human race as well. What a great storyline for all of these. But anyways, what it shows us is what they have in common is that we as humans fear robots. We think that they will take over our world. They could kill us. And when we're talking about it in trading context, a lot of people fear that the robot will take over your trading account, trade more than it should, and lead to margin calls, broker issues, and so many things that could set you back years and lose the money that you've worked so hard to make. So let's talk about how do we prevent robots from taking over our account when we use the Options Auto Trader. So first off, we need a hard set rule. We need hard set rules that the auto trader must follow. So you need an auto trader that allows you to create rules, not an auto trader based on AI, which is some unknown thing, or a black box, which is some unknown workings of a strategy that you don't actually know what it's doing. So that's exactly why the Options Auto Trader is programmed to only do what you tell it and what rules you set. It will never do anything outside of that, so that we can kind of cut down on any weird happenings, situations, or performances with our account. It will only ever do what we instruct it to do. Now let's talk about some of the safeguards we can instruct it to do so that our account is protected. So it says, good to know, Austin, but how do I prevent the Options Auto Trader from over trading my account and the broker giving me a margin call, meaning that you use more money than your broker account has, so the broker is going to call you and be like, yo, you owe us this much money. No one ever wants to be in that situation, so let's see how we prevent that. So that is safeguard rule number 1, which is buying power restrictions. You need to set how much money an auto trader is allowed to use or trade with. So for the Options Auto Trader, this is called buying power allocation, which means the max amount of money that the auto trader can use for all of the current open trades. So let's say that you have $50,000 in your account, and for this specific strategy and automation that you set up, you want it to use no more than $10,000 of the 50. So what you're going to set for your buying power allocation is $10,000. This means that the auto trader will continue to place trades based on the rules that you set until the buying power of all the open trades combined hits or would exceed $10,000. It will never exceed $10,000. So if putting on a new trade would exceed that amount, then it won't put on any new trades. So again, buying power allocation is the number 1 rule. It restricts the auto trader of how much money it can trade. So again, if you have any fears about over trading, make sure to set the buying power allocation to a lower amount. You might be saying, that's awesome, Austin, but I've heard that you can't have stop losses on options. Is that true? If so, how do I protect my account from suffering large losses? So again, that is true. There is no way to set stop losses when you're trading options. Here's some great examples from Scottish trader who wrote on Reddit. It says, it needs to be said that stop losses can sometimes not trigger or fill, as the option prices can move quickly and pass the trigger order. So when you're setting up a stop loss order, you need to set the price that you want to get out at. And sometimes the option prices move so fast that it jumps over that price and your order never fills or executes, which means that you never actually exit based on your stop loss. So he says there, you can use a stop, but do not rely or trust stop losses. And I couldn't agree more when you're using your broker. Now, Bitwise says options are priced differently than stocks and their prices can jump without warning. Accordingly, they can and will jump stops. Do you hear that there's another person proving, and again, if you've ever done a stop loss on options, you know this, the options price will jump over your stop so that you never actually get filled and you're never actually protected. It could jump over your stop and then keep going down, resulting in losing thousands and thousands of dollars purely because your stop loss did not execute. Chemical Rascal on Reddit said the same thing. He said the other big factor is liquidity. Sometimes getting a fill on your order is a proper pain in the butt. If you're trying to do a stop loss on multiple legs as a whole single order, forget about it. You won't be able to get a fill. What is he saying here? When you start doing complex strategies like the 1-1-2, like iron condors, like strangles, where there's multiple legs inside of one trade, the broker, it's almost impossible for them to do a stop loss because there's so many moving parts that they don't know how to manage it. So if you're trying to set a stop loss on a 1-1-2, on an iron condor, forget it. You won't be able to. You're just going to have to constantly monitor your trades and deal with the loss when it happens. And it's going to be a pretty big one. Last but not least, options trading says the same thing. Price can spike or drop suddenly, then quickly recover, which can trigger a stop loss and close a loss position when you would have had a profit. So in summary, stop loss orders can have unpredictable results and are not reliable to always close when you expect. Yes, so you're right. Are options trading? Can you do stop losses with options trading reliably? And the answer is, up until this point, no. That's why I've literally spent 5 months in depth coding a way to make this possible for the first time ever. And I call it the stealth stop loss system. It's the only way you can set a stop loss, especially on complex options trades like 1-1-2s, iron condor, strangles, and things like that, so that you can protect your account with stop losses that don't trigger early or prematurely due to market makers and price movement. So again, how exactly does this work? Well, it works by your stop loss order sitting in our third-party weighting system and watching the market. And when your trade hits the loss amount that you want it to, then it will send your order into the market. This way, price moving or market makers don't see that order and can't trigger it early. Now, you can actually have a stop loss that protects your account that won't be affected because it's sitting in this third-party weighting system only to be sent in the market to protect your trade when it needs to be sent. So, safeguard rule number 2 is have a stop loss. And if you're using a broker, you can't currently do this, which is why the Options Auto Trader basically pays for itself with just the ability to have a stop loss. So again, how do we do this? Well, we go into the Options Auto Trader. We set up under management rules a stop loss percentage, which again, most of us are already doing. We're just constantly watching the chart to know when it gets there. But now we can have an automation that watches it for us and does it in a very safe way. And so again, we set up our stop loss percentage, which could be 200%, 300% of credit. That's about normal. But again, if you want to learn more about what the best stop loss rules are, stay tuned because I'll be sharing more on that towards the end of this training. So you might be saying, wow, that's incredible that we can now do stop losses, but what happens if the market crashes either during the day or overnight? Won't I end up losing thousands of dollars? Yes. Yes, you will. Here's actually a story from an investment manager who sold options for his hedge fund.
Good afternoon. This is James Cordier of OptionSellers.com with a market and account update for November 16, 2018. Needless to say, the events of this past week have been incredibly devastating for our clients. This rogue wave that I was unable to navigate has likely cost me my hedge fund. And the reason why I had a hedge fund is because you are clients. I promise you, every day when I woke up and I would check the markets, I was checking for rogue waves. I am so sorry that I was unable to manage the rogue wave that hit us this week.
Because of situations like that where option sellers are losing hundreds, if not hundreds of thousands of dollars by option selling, by being stuck in a crash and a pullback, that's why I created a system called a mathematical crash warning. It won't get you out before every crash, but it will get you out of 90% of crashes. With the 10% of crashes that it doesn't get you out of, your stop losses will then kick into effect and limit your losses. So it's one of the best ways to limit the risk of crashes, market pullbacks, whether the market is open, whether you're awake or not, it will manage this for you. Here's an example over the years. So you can see here in this large example, this is the COVID crash from 2020. It triggered that the market was going to crash, and it allowed us to get out of our positions before the market crashed. You can see that it did the same thing here back in 2018, once and twice, and it's done it twice so far this year to get us out of the market before it pulled back, resulting in us would have losing thousands of dollars, but now we were able to lock in profits instead. So again, safeguard number 3 is a crash warning. You need a crash warning, and you don't need one based on emotions, based on ideas. You want one based on math, so that it knows that, hey, mathematically, the market is likely to pull back here, so that you're not hoping and guessing and stressing. Because I don't know about you, but there's a lot of times where I believe the market will crash and it never does, and I miss out on a lot of profit, or I close too early and the market keeps going up, or I'm so optimistic that I don't think about the market crashing and then it does. So instead of relying on my hoping and my guessing, I now use a math model to know when the market is going to crash and to get me out of it. And this is so easy to set up on the Options Auto Trader. You simply just click enable the market crash safeguard, and it will get you out of your trades when a crash is predicted. Look, here's the truth. Nothing can protect your account from everything. However, the Options Auto Trader can still protect your account from most crashes, most pullbacks, and rigged stop losses without you needing to watch the market or your trades 24/7. Don't believe me? Let's hear from Nicholas. I mean, you don't have to share exact results if you don't, but have you been saying some like results that you kind of like been wanting to see with your trading account growth?
Yeah, actually, I have a Google Sheets thing. I think I mentioned in the text message that I created, and now I know it's a little skewed towards the high side because I'm adding money each month. So, like, I'm trying to like just because I'm trying to figure out what is like the ideal, like a good estimate of monthly income. So I right now, like, I have it at like 5% because that includes my my in contributions too. So I guess after a couple months, um, I'll see kind of like what the average is, like return, and then I'll be able to more dial that in because I'm not sure what's reasonable right now. You were saying like 3 to 5% a month. So then all of a sudden I started this month with only like, oh, was it $2,300, and I put a lot of money in this month because I finally transferred my other brokerage in, and I've already made like, I think since premium net of fees, I think I just added it up a little over $500, and I just have just about $600 cash in there. I mean $6,000 cash in there.
Oh, that's
So
awesome.
that's only like 30 days. So, but I also know I'm front loaded because I open all these trades, so I don't have to wait for them to close. It
But
compounds. The
yeah,
compound potential is crazy.
if you were to recommend this program to a friend, what would you say?
Uh, I mean, I think it's just the peace of mind you get from not having to worry about it, and just you just keep you get like what I do is I automate things. Obviously, that's why I'm in the well, got signed up for the auto trader, like my deposit and stuff. And every time I got a new deposit that goes through, I have like weekly deposit set up. Then I just go and up my buying power allocation to account for the new cash. And it's just super simple. You don't have to go in as often as I do, but I like to fiddle with numbers. If I'm not fiddling with the numbers or Excel spreadsheet somewhere, I'm not really happy. So it's a you can just do it like once a month. You don't even have to go in that much. Once you get make some money, then you ever once a month go in and up the buying power allocation. It's just super simple, um, super stress free, and there's like these safeguards that you set up in there for stop losses, and the market crash indicator. So you'll buy your long positions to so you only keep the put debit spread, for the down markets. I just think it's just really well designed, and more importantly, I opened up Tasty Trade and I have no clue what the heck I'm looking at when I'm trying to do the options trade. Now I've done a lot of options trading in the past, but it's their specific layout that's confusing to me. Now I've slowly started figuring out, but I go to your dashboard and it's like it is so much streamlined. It does it for you, and it's just all in one place. It's very user friendly, and yeah, I mean, I trust it. I trust it more obviously now that I did, but there's over the next couple of months, and I'm really looking forward to seeing how the account progresses and how everything pans out. So
For
I'm
sure.
excited to see what happens.
That is automation secret number 2, the 3 virtually unknown trading safeguards that every automated trading strategy must have. And safeguard number 3, the market crash predictor, saved me $10,000 earlier this year. So again, if you guys enjoyed that, let me know in the comments. This is one of the greatest things that I could ever teach. So make sure you are enabling these safeguards.